Hello, everyone, and welcome to the global final of the Hong Kong FinTech Week Global Fast Track Pitching Competition for 2021. I'm Hannah Richardson, Head of Enterprise at Finasia, and I will be your host and MC for today's session. This year, we received over 400 applications for the Global Fast Track program from FinTech companies from 43 different global economies. Today, you're about to see the top 11 companies out of those 400 pitching in solutions that span digital assets, insurtech, wealth tech, capital markets, retail banking, commercial banking, and more. In today's final, each company will have 4 minutes to pitch, followed by 3 minutes to answer any questions from our judges. At the end of the session, the judges will submit their score sheets, and you can find out who has won live on the main stage at Hong Kong FinTech Week on the 3rd of November. We're delighted to be joined today by 14 judges who are all investor champions of the Global Fast Track Program 2021. So without any further ado, let's meet our judges and then start today's competition. Okay, great. Our first judge is James from AMTD Digfin.
Hello, I'm James DiBiasio. I'm editor and founder of Digfin, part of AMT Digital. I write about who's doing what in digital finance, fintech, and digital assets, and I'm very pleased to be here. Thank you.
Thank you, James. Next judge is Ron from AFG Partners.
Hi there, it's Ron Savino from AFG Partners. I'm the founder and managing partner of the fund. Our focus is on B2B and enterprise fintechs that want to grow in Asia, regardless of where they originate. So I'm excited to see the companies that are looking to grow in Hong Kong and Asia. Thank you very much.
Thanks very much, Ron. Our next judge is Cindy from Gobi Partners.
I'm Cindy from Gobi Partners. We manage a fund called the Alibaba Hong Kong Entrepreneurs Fund here in Hong Kong, and are very excited to meet everyone.
Wonderful. Thanks very much, Cindy. Our next judge is Priyanshi from Angel Hub.
Hi, everyone. Nice to meet you. I'm Priyanshi from Angel Hub. We're an equity crowdfunding platform that aims to target startups that require funding. I'm looking forward to seeing all the different pitches that we have for today. Thank you.
Thanks very much, Priyanshi. Our next judge is Edmund from Babel Capital.
Hi, everyone. It's Edmund Lau. I'm the co-founder and head of investment of Babel Capital. We focus on fintech, blockchain, as well as digital asset investment. Thank you.
Thanks very much, Edmund. Next up, we have Jacob from Chow Tai Fook Enterprises.
Hello, everyone. I'm Jacob Lee, a senior vice president at Choco Up Enterprises Limited. We are basically the family office for Chang family in Hong Kong. I'm in charge in a number of strategic and private equity investments in the region, including fintech investments. Thank you.
Thanks, Jacob. Next up, we have Carmen from Click Ventures.
Hi, everyone. I was an entrepreneur myself before I started to do investment 8 years ago. So I'm very glad to meet you all here. I love to look at the pitch from different founders because as an investor, we also learn from the founders. Thank you very much.
Thanks, Carmen. Next up, we have Sethapong from Fuchsia VC.
Hi, everyone. I'm Sethapong from Fuchsia VC. We are the corporate VC of Muang Thai Life Insurance, which is one of the largest life insurance in Thailand.
Thank you, Sethapong. Our next judge is Laura Shi from GBA Homeland.
Hi, this is Laura from GBA Fund Management Limited. I'm the managing partner focusing on TMT investment, including like fintechs, hardware, blockchains, and so on. And it's great to meet everyone here.
Thanks very much, Laura. All right, next up we have Stephanie from LQ Pacific Partners.
Hi, I'm Stephanie from LQ Pacific Partners. We are an SFC licensed asset management platform in Hong Kong. We are chaired by Mr. Zhang, one of the 5 founders of Tencent. Glad to be here today.
Thanks very much, Stephanie. All right, next we have Will from NetRoadshow.
Hi, good afternoon. I'm Will. I head up sales for NetRoadshow across Asia Pacific, where we work with all of the global markets teams at all the investment banks, helping them market deals, and are looking for new emerging technologies to partner with and work with going forward. Excited to be here.
Thanks very much, Will. All right, next up we have Philia from QBN.
Hi, this is Philia Chin from QBN Capital, a Hong Kong-based VC fund. We focus on early stage fintechs and our anchor investors, Tong family in Hong Kong. Pleasure to be here today. Thank you.
Thank you, Philia. And then do we have Manton from Regan International?
Hello, this is Manton, CEO from Regan International Asset Management. We are very active investment house on fintech and also IPO projects. I'm very pleased to be here as your judges.
Thanks, Julian. And then finally, do we have Mark from Vector, please?
Hi, Mark Munoz, co-founder of Vector FinTech. We're a venture capital fund based out of San Francisco and Hong Kong. And we've been making seed and Series A investments since 2014. We've got about 120 companies in our portfolio, and we're very, very happy to focus directly on FinTech. So excited to see what's coming next.
Thanks very much, Mark. Thank you to all of our judges for being here today. Some really exciting judges watching our pitches today. No pressure pitching companies. All right, let's start with our first pitch for today then. So Dr. Tan, if you can unmute yourself and share your screen for us. Dr. Tan, you have 4 minutes and your time starts now.
Thank you. Hello, everybody. I'm Dr. Tan. I'm a founder, CEO of IDA Technologies. We are transforming insurance with AI. Now, we all know that insurance business is really growing, especially in the Asia Pacific. And what IDA is doing is we are providing tools, AI tools, to help insurance cope with this growth. Now, in the 5 years since we've been in existence, we have now built a portfolio of solutions for insurance companies. Our solutions can be looked at for operational excellence, automation, that's claims automation, underwriting, for managing fraud, and finally, for increasing revenue. That is, how do you recruit the right agents and how do you match the right agents to the right customers? I will now deep dive into 2 of our solutions so you can see a bit deeper. I'll talk about claims, which is one of our flagship products. Now, we all know claims processing is complex and it's very manual. Each insurer will process 1 million claims annually, and we know each claim can take up to 15 minutes. Now, the dollar value of all these claims processing and the fraud and leakage is estimated at $13 billion a year. IDA's solution for claims processing is this. When you deploy our solutions, you can get 80% automation, you can get 60% reduction in time, and you can reduce your fraud by 50%. Now, this has already been proven in a number of insurance companies across Singapore and across the region. Client testimony from Prudential, one of our earlier customers, they were able to reduce their claims processing time down to seconds. A more recent example from AIA Singapore, they are now deploying this solution for all their shield plans, which means for everybody who is resident in Singapore. The second product I want to talk about is our Smart Fraud. Now, Smart Fraud is intended for you to reduce leakage in your company. So if you look at your book, what our solution does is give you a big picture view of the number of claims you process and the dollar value leakage you are seeing. So in this particular case of our Hong Kong insurer, 375,000 claims, 16,000 are flagged as potential outliers. Dollar value is 130 million. Now we rank the top hospitals causing this problem, in this case, Hospital ABC, and the top reasons why they are outliers. And we give by ranking the most problematic cases. You can now zoom in into specific providers, like say in the case of Hospital ABC. Now you see the reasons for ABC, you see the top cases for ABC. Let's zoom into one particular case, case number 125. Now you can see the details of 125. It was for an ICD of R10.9. It was for abdominal pain. This person had surgery, the bill size was 295,000, right? Now you look into the detail, why is it an outlier? You can see that its cost is a lot more than the upper bound for this claim, which is only 92,000. We give this kind of detail for every claim that we look at. I'm glad to say we are going to launch multi-country for Smart Fraud in the month of November, starting in Thailand, and then at the Hong Kong FinTech Week, and then finally in Singapore FinTech Week. Now, IDA as a company, we are now operating in 6 countries. We have processed over 10 million claims, and some of the top insurers in the region are our customers. Now, we did $2 million of revenue last year. Our portfolio of products is now completed. We are going into our SaaS, Smart Fraud launch in Thailand, Hong Kong, and Singapore in November. Now, the company is founded by a team of industry veterans, supported by 30 over technical people, solutions delivery, and business development. So at IDA, we are transforming insurance with AI. Thank you.
Yes, question from James, please.
Dr. Tan, thank you. What is the way that your software interacts with the insurance company's existing tech stack? Are you a middleware provider? Are you trying to get them onto something more sustainable long-term? How does that work? Thank you.
Our solutions is a loose couple. We are using API to interact with the companies. So in fact, when we deploy our solutions, we really don't touch their existing core systems. It's through the API calls pool, we give a result. And in fact, many of our customers take a very conservative approach. They kind of run in parallel for a while. You can do A/B comparison, and with confidence, you slowly switch over our solution.
Thank you. I saw a question from Ron as well.
Yeah, Dr. Tan, thank you very much for your time. I noticed you had, I guess, initially about 6 different products. So question I have is just more along the lines of, is it modular in what you present for an offering, or is it a whole platform? So can people pick and choose different modules? And also, I guess, to a certain extent about your expertise, or I guess the ability to actually use your AI. Do you expect to have multiple use cases over time, or are you going to zero in on some specific use cases over time?
Okay. So our solution is modular, though we take a holistic point of view, end-to-end point of view. So, but we find that some insurers just want the fraud. Some insurers just want the claims adjudication. Some insurers just want the OCR. So indeed, it is modular, and people pick whichever one they want at the right time. And in terms of our AI capability, our background was from R&D, so we can build different kind of AI solutions. But in the last few years, we are quite focused on a number so that we can build very, very deep expertise rather than just touch on something, right? So we reserve the R&D capacity that we have for very strategic customers.
Thank you. Did I see a question from Sethapong, please?
I have 2 questions. The first one is, what's your revenue model? And the second one is, who are your main competitors?
Our revenue, our solutions can be deployed on-premise, which we call our enterprise software solution, and it can also be deployed on the cloud. So actually, we have done both. Our enterprise solutions are embedded in places that I mentioned, the customer references you saw. They were all on-prem delivery to specific insurers. And then when we launch our fraud as a service, you can call it by API. So that's a software as a service type business model.
Okay, Sethapong, was there a second part to your question, sorry?
Yeah, the second one is, who are your main competitors?
Ah, right. Okay, very interesting. Actually, in the area of healthcare solutions for insurance in the health insurance sector, actually, we do not see many competitors offering the range of things that we do. There are AI providers in the region, but they tend to focus more on P&C, right? Like automotive insurance. So the people doing sort of authorization, pre-authorization, claims decisioning, fraud for healthcare, we do not see very many competitors actually that can offer the range of products we do. I think it's to do with building that knowledge base, very specific in the healthcare domain.
Thank you. All right, I think I saw Mark's hand next, then we'll come to Manton if we have time, okay?
Congratulations on all the progress you've made over the last couple of years, and the revenue number is great. Could you help me break down that revenue number across your products? Because you've got quite a few, and I'm trying to understand where the real driver of growth is. And then second, right, how do you feel the fraud product that you're going to launch is going to fit into that growth plan?
Right, okay. All right, so our most mature product, our claims and fraud, right? We have now got multiple installations in Singapore and across the region. The newer products are like the agent side, newer products. So again, we try not to be too diverse. We try to focus. We believe in trying to be really the #1 player in the space that we are in, right? So I recap, our main products are fraud, claims and fraud. The agents are coming out later, right? And your second question was on, sorry?
No, I think you covered it with the fraud product. Thank you.
Right, right. We think our fraud product will be a real winner because if you look at the ROI value creation, when we do claims automation, it affects a department. When you look at fraud, actually it affects the top line. We see anywhere from 3 to 5% of claims being potentially fraudulent, so the impact to our bottom line is very significant. That's why we're launching it in November.
Right, that was right on the buzzer. Apologies, we didn't get to all of our judges' questions, but we will have to move on there. Thank you very much, Dr. Tan. Okay, Dr. Lim, you have 4 minutes and your time starts now.
Hi, I'm Kim Hua, CEO and founder of Chameleon. The name Chameleon is inspired by the adaptive nature of Chameleon and my alma mater, the University of Cambridge. We specialize in sustainable wealth management. Let me address the 4 problems that we are solving. Firstly, almost all investors are concerned that investing sustainably will compromise returns. And if one adopts screening, Schroeder shows that screening does not enhance returns. So how does one invest sustainably? Industry experts have agreed that sustainability needs to be integrated into portfolio construction. This would mean portfolio optimization, which is maximizing both ESG and returns while simultaneously minimizing risk for an investment team. We do it this way, and it actually enhances returns 2 to 6% per annum. Secondly, can investments be relevant to UN Sustainable Development Goals? We allow portfolios to be aligned to a specific SDG, and in addition to financial assessments like P&L, risk metrics, we also relate its impact on SDGs. We can see how a portfolio has failed, barely achieved, or has performed exceptionally well in hitting the SDG. Thirdly, 70% of clients want personalization. 83% of millennials like thematic investing, such as electric vehicles. So we help institutions personalize each strategy, even at the production stage, making it profitable to manage even small AUMs. And the strategies can cover any one of our extensive strategies, so each client solution is personalized. Lastly, marketing without data is like driving with your eyes closed. And the same is true for making sound business decisions. For example, managers often ask, what is our marketing ROI? Which is the media channel that has the most leads and the highest conversion? Which relationship manager has generated the most revenue, and which analyst generated the highest investment fee? So we provide institutions with data-driven analytics to understand clients, be responsive, and align internal teams. This can also be formed data to be used for AI-targeted marketing models. We know how time-consuming it is to integrate the different components. So we offer an all-in-one wealth management platform, from lead generation, portfolio personalization, straight-through processing to performance analytics. Our solutions can be adopted in different cases. Institutions can use our single platform to test, optimize, build, and deploy strategies so they can create mutual funds and run profitable, personalized mandates. Institutions can also distribute their products digitally or with relationship managers. Institutions can also offer a one-stop solution and capitalize on our integrated data intelligence and automation. And we can be used by financial advisors, fund managers, robo-advisors, Islamic banks, and brokers. There are 4 points that differentiate us from our peers. Firstly, our proprietary portfolio optimizer allows us to invest sustainably in ESG or UN SDG without compromising returns, so addressing investors' key concern. Each investor's portfolio can also be personalized and optimized cost-effectively, so it's profitable to manage even small AUMs. Data intelligence is integrated, so business managers can gain insights and understand their clients' preference and align teams. Lastly, our team has strong links to the University of Cambridge and 3 Cambridge PhDs in finance, so continuously innovating and improving. Our work has been recognized internationally, including from the Principles for Responsible Investment. Let me end here with a summary of why us, our solution, and our team. Thank you.
Fantastic, right on the timer. Thank you very much, Dr. Lim. All right, let's see if any of our judges have any questions for you. Yeah, I see a question from Jane, please.
Sorry. Thank you for that. Because you're dealing with such a holistic approach, who do you pitch to? Because I see a lot of things going on here. Who will sign the check to onboard you, and do you have any clients that you can share with us?
Okay, we work with fund managers, brokers, and financial advisors and wealth managers. So they use us in fairly different way. For example, a fund manager could be we have a fund manager who has set up a global fund to run a global fund in a dynamic thematic manner without having to build out a large research team. And that's one angle. For the financial advisors, they could be using us to personalize different types of advice to an individual client. And for brokers, to be personalizing recommended type of trades to their clients. So depending on the nature and the type of clients that they prefer, that they want, then they will target a different type of recommendations. And the engine is robust enough to be handling all these, the portfolio optimizer.
Thank you. I think I saw a question from Priyanshi first.
Hi, thank you for the pitch. I wanted to know more about your go-to-market strategy. What regions are you currently targeting or planning to target?
We go to market, basically we partner with institutions, so it's a B2B, and our current target is in Singapore, India, Malaysia, and Qatar, and hopefully in Hong Kong.
Thank you.
Okay, I think I saw Cindy next.
Thank you, Professor Lim. I have a question on your revenue model. Can you walk us through your revenue model and related question, the sales cycle for one of your key clients?
Okay, our revenue model, our preferred revenue model is a fee sharing basis. So taking the example of the fund manager, so they have launched a fund. So basically, based on the fund, we take a share of the fees. And the sales cycle, it depends on the type of nature, depending on how large or small. So the benefit, the wealth management business industry itself is a very fragmented business. So the largest wealth managers only control about less than half of the whole market. So there's a lot of second tier and third tier players which would not have the capability of developing the solution that we have. And these are indeed our target market.
Yes, please, Sethapal.
What is the current traction of the company right now?
We have a fund manager, two fund managers who are with us, and we have several under close discussions. One in Qatar, one in India, as well, one Indian broker and wealth manager, as well as one Islamic bank in Qatar, and several wealth advisors and financial planners in Malaysia.
Thank you. Did I see one from Edmund, please?
Hi. May you talk about a few words on your financials as well as any reputable investors behind you?
We, as mentioned, we prefer a fee sharing model, mainly because that aligns everyone's interest. We have quote unquote skin in the game. Secondly, because by doing a fee sharing model, there's zero capex on the other party. And as such, then the take-up rate is a lot easier. And given that if we are targeting the second, third tier players, then the acceptance is easier to get that. So sorry, what was the second part of the question?
Have you been fundraised before?
We have angel investor, and currently we are talking to one of the institutions in Qatar.
Okay, there's about 8 seconds left on Dr. Lim's clock. So Laura, you can ask your question. Dr. Lim, you can answer as roundly as possible in 8 seconds.
Yeah, I just want to know the background of your tech team.
I myself, I have a PhD from Cambridge, and I'm the main person who coded the profit optimizer. We have 6 other developers on our team.
Okay, that's all we're going to have time for. Well answered in the time limit there. Thank you very much, Dr. Lim. Judges, thank you for your questions. Let's bring on our next company now. Okay, Bernard, you have 4 minutes and your time starts now.
Thank you. Good afternoon. I'm Bernard Del Rey, CEO and founder of Capital Preferences. We're an enterprise software company with deep expertise in the decision science, applied behavioral economics, and human-centered design. And today, we're here to present our sustainable investing simulator, which allows an individual investor to express their preferences to a financial services firm and turn those preferences into a sustainable investment portfolio. We believe that ESG investing is built on trust. There literally are $10 trillion of assets that are set to move as ESG takes hold. And the question is, who will win and why? We believe it's those firms who will efficiently understand their individual clients' preferences and be able to personalize a solution based on their preferences and what they care about. However, today, it's unequivocally agreed that there is a very, very bad client experience in ESG advisory. And it involves both investors who are confused by ESG terms and lexicon, advisors that are overwhelmed by information and suddenly having to understand portfolios and companies from an entirely new perspective. And everyone is left wondering whether this portfolio actually meets the client's preferences. And so this is an opportunity that we intend to seize, and the solution for this opportunity is found in the decision sciences. My two co-founders, Shahar Kareev, who's chair of the economics department at Berkeley, and Dan Silverman, an accomplished professor from Arizona, are set to apply the decision science techniques that they've garnered over the last 20 years to the field of understanding individual investors' preferences for ESG investing. And when we take a look at what this looks like, it looks as if for a client, a simple but powerful client experience where they express their preferences using a simple activity, but the power of what we learn is unprecedented. And let's take a look at it now. So in what you're about to see, we're going to show you a journey where a client is introduced to investing terms on their terms. They can browse various sustainability topics, and then they begin the activity. There's few instructions because clients learn while doing. They don't read. They don't want another white paper. Instead, they express their preferences by moving the slider from left to right to show us which investable causes are important to them. We introduced this gamified concept called a mystery investor, which stress tests their preferences by adding extra incentives on certain causes. And the results can include some exclusions. We can move exclusions in and out of portfolios based upon clients' preferences. And we result in a sustainable investing persona, one that the client can relate to and understand. Here we see a climate champion, and we also understand the investor's style of ESG investing. We can offer them to explore a few funds and align those funds very clearly with what their sustainability match is. Does this fund actually match the portfolio characteristics that the client believes are important? Now let's take a look at the advisor journey. The advisor journey is a 5 to 7 minute conversation where an advisor looks at the client preferences, validates that they understand them, and basically begins the process of aligning the client to the portfolio that best fits them. They can move clients from thematic investments to broad-based investments based upon their preferences and ultimately end up with a portfolio that is a fit. Now, we see this as a huge opportunity. Again, $10 trillion worth of assets are set to move. And the way that it will move is based upon an excellent client experience. This is a client experience that 96% of clients can complete unaided. It is preferred 3 to 1 versus the traditional methods, and it is 15 times faster than what an advisor can accomplish on their own, if they even were able to achieve this level of accuracy. It's an appropriate client experience.
All right, Bernard, I'm afraid I'm going to have to stop you there. That was 4 minutes, but I think we have questions from our judges. I think I saw Ron's hand go up first.
Yeah, hi, Bernard. Thank you very much for the presentation. Obviously, ESG is a very significant sector at the moment. Question I have is, I mean, your focus is on the demand side, and to a certain extent, you're identifying the needs of the client base. I get that. What about the supply side and the data side? I mean, are you doing anything there? I mean, I think one of the issues of ESG investing is the fact that there is not a lot of standardization, that the data isn't necessarily that reliable, and it's quite fragmented. So I'm just trying to understand how you help on that side of the problem.
Yeah, I mean, we think that every investment manager, every wealth provider is going to choose their own data set and manage their own portfolios. So what we're going to be able to do is create a model of human behavior and how these clients prefer various causes and map that to the data set that they agree. So we have a very close relationship with one of the major data providers. They have 35 individual parameters that they look at investments from, and we can bundle those into optimal bundles and then map the client to those bundles while including risk preferences, which is also which is a flagship product that we have as well. So I think you're absolutely right. We're never going to change that. That's unsolvable. But what is solvable is understanding the client better.
Thank you. I think I saw Mark's hand next.
Hey, Bernard, thank you for that presentation, and the demo that you're showing us looks fantastic. It's great user experience. Question is, how do you solve for greenwashing in your data analysis and get to that point where you're able to look at those funds and determine what's the right investment criteria?
Yes, thanks, Mark. So again, the data providers are the ones that have to sort through that issue. What we need to do is basically understand the client best and then map them to portfolios based upon the data that which the enterprise financial services firm provides. Now, what we have seen, just to address how we do solve that problem, clients want to trust that what they own aligns with their preferences. So if you're a firm that's distributing ESG investments, you need a process that demonstrates that alignment. And today we don't. We just simply say, this is a climate change fund with 3 stars, not this has a 92% alignment with what you care about.
Thank you.
Yeah,
Thank
thanks,
you.
Mark.
Yes, Stephanie, I think I saw you next.
Right. Yeah, I think everyone seems quite concerned about greenwashing. My question is, apart from this team, this team that you've shown us on the screen, do you have any strategic investors or partners or advisors who have kind of deep ESG expertise?
The answer is yes. We've published in Science and the American Economic Review on the core distributional preferences. We have a very close relationship. I won't name them here just because we have an NDA with one of the top ESG data providers. We're lucky to have been self-funded, both because of our histories and we're profitable. Over $4 million in ARR. We'll likely double next year. Our top client is, one of the top 3 asset managers in the world. So we're, well established and making great progress there.
Thank you. Yeah, a question from James, please.
Bernard, I like the focus. Do you intend to stay on this focus, or do you see a point where you would expand what you're doing with your clients?
Yeah, this is our second flagship product. Our first is understanding clients' risk preferences using this gamified technique. And the way that we think about it, and one of the earlier speakers alluded to it, that simplification and personalization are the path to financial well-being and what all financial services firms need to figure out in order to advance their client bases and assist their client bases. So there's other domains that we'll solve next, including helping clients prioritize their goals, helping people understand their spending and time preferences and consumption preferences, estate preferences, banking preferences for fixing and floating loans, all those hard decisions where you need to really look deep and understand yourself and reveal something to a financial institution are the places that we're going to play.
All right. Thank you very much, Bernard, for the presentation. Judges, thank you for your questions. We will bring in our next company. Thank you. Okay, Brian, you have 4 minutes and your time starts now.
Thank you. Good morning, judges. Good afternoon, judges, or depending on where you are. My name is Brian Sang, and I am the co-founder and COO of Choco Up. Choco Up is a data-driven, revenue-based financing and growth platform offering funding as a service, bridging the billion-dollar funding gap for Asian businesses. And our tagline is simple: grow now, pay later. The market we're addressing essentially is business owners' access to capital in a seamless manner so they can immediately create value. This is made possible because of data integration and analysis, as well as leveraging our financing, business analytics, and partnership network. We're going after a huge market, especially after COVID, because the global trade financing gap is projected to be 1.5 trillion by 2025. And the global credit gap currently, it's around $2.5 trillion. If you look at the business funding gap in the ASEAN market, it's actually around $300 billion right now. And if you look at the market bottoms up, there's 17 million startups and SMEs in the ASEAN market, as well as 400 million digital population in Asia. Just to go through our fintech platform real quick, whether you're using sales channels like Amazon or Stripe or Amazon or Shopify, or payment gateways like Stripe or Adyen, marketing platforms like Google Analytics, Facebook Ad Manager or Google Ad Managers, or accounting software like Xero, or even open banking, you can essentially come to our platform and integrate with our current data platform. And once we acquire data, we will feed that data into our own credit engine, and we will do an assessment across an array of micro and macro factors. After that, if we find that you're a good fit, we're able to give you a term sheet, essentially, where we're going to tell you what is our financing amount, what is our fee percentage, as well as the revenue share. And you can then deploy the money into value-generating activities, including sales and marketing, or inventory purchase, or marketing spend. And because we are connected to the merchant via API, we'll be able to track the company's performance in real time as well as a very seamless repayment process via payment gateways, neobanks, and bank integration. We care about the companies we fund, so we've actually fund a lot of women founders as well as people of color. We also care a lot about the environment, so we fund a lot of clean energy companies as well as sustainable companies. So far we have done over 160 rounds of financing across major markets in ASEAN, including Indonesia, Singapore, Malaysia, Philippines, Vietnam, Thailand, Hong Kong, and Taiwan. We have achieved a 5x growth so far versus 2020, and our customer recurrence is 90%. This is just a snapshot of the companies we have funded. As you can see, from seed, self-funded, bootstrap to Series A, B, C, D, even pre-IPO to post-IPO companies as well. Just to go over our team real quick, my partner, Percy Hung, is my college classmate. We have met over 15 years ago. He's a serial entrepreneur with over 10 years of experience. I'm Brian. I started my career in investment banking in New York, doing leverage finance. And after that, I moved to private equity as well as personal investments. Louis is a serial entrepreneur also with 2 successful exits of its startups. And Kitty is our banking veteran who does credit risk assessment for us. Our goal is to do $500 million of financing by 2023, and we are quite confident we can do that. Thank you very much.
Thank you very much, Brian. All right, let's see if any judges have any questions, please. Yes, please, Ron.
Brian, thanks for the introduction presentation. Just a couple of questions actually for you. One, I just wanted a better sense of what your financing is, your balance sheet behind this. Is this self-funded? Is this out of the equity, or do you have backstops of either banks or debt funds backstopping these loans? And the other part of it, which is, I guess, more of a question about where the market is headed. What I've noticed is a lot of these companies like yourself that are providing financing have moved into much more of a broader financial services offering. So providing a variety of different services to these SMEs, and not just lending, but rather potentially bank accounts and FX, multi-currencies, et cetera. So just kind of curious what your vision is. Are you going to stay as a core lender, or are you going to be looking to extend into other financial services for your client base?
Yeah, thank you. Sorry, hold on. So yeah, thanks, Ron. So basically, currently we have a balance sheet that is funded by friends and family mostly. And with regards to product offering, we think the market is actually huge. I think we're just the tip of the iceberg. Even though we believe we are Asia's largest revenue-based financing right now, but as I showed you earlier, I think there's $1 trillion market just in Asia. I think right now we believe in Legos instead of building our own. So we're working with lots of payment gateways, neobanks, virtual business accounts, basically different service providers in order to enable additional product offering. However, our plan is to integrate with them first, and then subsequently offer other types of products like analytics and other payment services after that.
Thank you. I think I saw Laura's hand go up as well.
Thanks for the introduction. 2 questions. First, what's the project returns as a percentage are you looking for each of your investment? And second, what controlling strategy you used for your fault collection from the counterparty?
Yeah. So actually, our funding horizon is quite short. It's about 4 to 6 months. And typically, very roughly, we charge about 10%. So you can imagine we can turn that capital 2 to 3 times a year. That's about 30% a year of IRR. And then our collection method, basically we integrate with banks. So we can do DDA with banks, as well as via payment gateways, we can do automatic payment split.
Thank you. I think I saw Cindy's hand go up next, and then we'll come to some other judges afterwards.
Thank you so much for your presentation, Brian. Quick question on, I thought you have quite a diverse base of customers. So from a credit underwriting perspective, they have quite different risk profiles. Are there any markets that you plan on focusing on going forward? What will be your key growth drivers? Thank you.
Yes. I'm sorry, guys. I had to move real quick. Yeah. So your underwriting strategy is my underwriting strategy. Is that right?
Yeah, and going forward, is there a particular market that you plan on focusing more on, like a particular type of companies, be it e-commerce or?
Yes, absolutely. So basically, our underwriting strategy right now is, so I come from a credit background. I started in leverage finance. So I issued high yield bonds and leverage loans for a few years. We have a dedicated credit team. Basically, once we're able to collect the data via sales channels or payment gateway channels, we're able to feed that data into our own credit engine. So because the companies that we're looking at are more or less new age companies, so instead of typically looking at like traditional metrics like leverage or interest coverage, we're looking at things like, hey, what is a customer acquisition cost? What is customer lifetime value? If it's a SaaS company, what is the churn rate, cohort analysis, things like that. So we have our own engine that does that automatically for us. In terms of the market, essentially we are very much focused on Asia. So again, Hong Kong, Taiwan, major Southeast Asia market will continue to be our major focus going forward.
Okay, there's just a few seconds left on Brian's clock. I think I saw a question from Sethapong, if you want to try and ask it, and we'll see how much Brian can answer. So Sethapong, over to you.
Yep, just a quick one. Currently, what is your NPL rate right now?
So knock on wood, actually it's 0 right now.
Thank you.
I can answer that.
Okay.
Yes,
Lovely
awesome.
and brief. Thank you very much, Brian. All right, we're going to move on to our next company. Okay, Christy, you have 4 minutes starting now.
Good afternoon, all. This is Christy from Finalists. I'm very excited to be here to introduce Finalists Voice AI for financial regulatory compliance. So the global financial compliance market is a huge market. It's a $300 billion market, as you can see. And back here in Hong Kong, our financial markets, as obviously you know, is regulated by SFC, HKMA, IA, and NPFA. And just talking about last year, SFC has already issued about 3 billion Hong Kong dollars on fines on regulatory breaches already. And among all these cases, we can see that sales compliance is a key regulatory focus that has costed banks and FSIs millions and hundreds of dollars. So how does our AI solution, our speech analytics solutions, comes in handy and helps banks to alleviate these problems? Let's see how.
So after we upload all the code to the system will automatically doing all the scoring and analysis. And if there's problem appear, it will highlight in red. And when we review the code, you can see all the transcript here. And on the right-hand side, there are all the sorting items. For example, whether the agent asked the customer name, their birthday, and we can review some of the key issues, like whether they speak about the investment disclaimer and the risk survey has been done. For example, the recording amount didn't spoken out, and there are high-risk items that I can review instantly. That other than the misrecording alert, there are also misselling statement being spoken. Let's hear what is being spoken at the time. 我想問多句，咁我會唔會有機會蝕晒啲錢㗎？我啲客人未蝕過錢㗎。Customer agents say, no way, our customer never lose money. So this kind of mis-selling statement is being captured and highlighted here so that the supervisor can review and do all the remedies before being finalized by the compliance regulators.
So as you see, our solution helps banks to identify mis-selling practices through our automatic speech recognition and NLP technologies. So it looks simple, but then what makes it so hard for banks and FSI in Hong Kong to adopt these technologies earlier? So let's see why that is.
係今日咧，好多謝 Dr. Miles 咧，同我哋嘅同事介紹咗友邦科技嘅一啲 technology solutions. We are very impressive and really interested in knowing more and obviously collaborating further. I'm sure that would bring a lot of success with our clients. 其實呢，除了香港之外呢，我们觉得在那个大湾区里面呢，我们还有更多的合作机会了。谢谢各位。
So this clip showed a very typical language and audio processes situation here in Hong Kong. So we have 3 official languages in Hong Kong, as you know, English, Mandarin, Cantonese. And even if your relationship manager speaks all 3 of them, probably there's a tendency that they may switch languages on the fly or may speak with an accent as well. So we at Finalists, we are the only company in the world that can actually handle this unique language environment in Hong Kong, especially in financial markets, where language accuracy is very foundational for further analytics efforts to do. So we're not just only serving banks, actually we serve also the law enforcement and regulators in Hong Kong as well. So for banks, for the fintech side, we serve almost half of the top 10 banks in Hong Kong. And for the regulator side, we help them to investigate any financial crimes and law enforcement issues as well with our AI technologies. And in the past couple of years, our technology is also a very pleasure to have won few awards. So the latest is the HKMA Global RegTech Challenge, and we have won in the content and customer protection category as well. So we are very happy to be here today, and we're open for questions as well. Thank you.
Thank you very much, Christy. All right, let's see if any judges have any questions for you, please. Yes, please, Carmen. I think I saw your hand first.
Hi, Christy. I want to ask, so is this one of your product, or this is actually your current focus for the whole company?
Hey, Carmen. Hey, guys. This is Miles. I'm the CEO of Finalists. So sorry for joining.
Hi.
Hey.
Nice to meet you again.
Meet you again. So this is just one of the products we do. So we have lots of presence in different sectors. So in the financial sector is our focus since the past 2 years. Where we are mostly working with the regulators and the financial institutions, including banks, security firms, insurance companies.
Mm-hmm. I see.
Yes, please, Manton.
Yep, very good to hear from this. But can you explain a little bit more about like your team backgrounds, experience, and also like how is your financial situation right now for the past 5 years or maybe upcoming your forecast? Yeah.
Yeah, so this is our team background. So we're actually a spin-off from Hong Kong University, where me, my chairman, my CTO, I mean, the three of us, we're all former professors, where we in school just teach the course on the big data and everything. 6 years ago, we decided to spin it off, run as a commercially. So that's our background. We have a team of more than like 10 to 15 different PhDs and scientists. Many of them actually are professors and kind of doing this core technology with us. So that's the team background. But our business side, we have John. John is actually our VP business operations. So he's the one who helped me run our business operations and sales and marketing. So John is actually a veteran in the speech recognition world field for over 2 decades. So he was actually the one who brought this technology to Greater China, more than around 2 decades ago, before iFly Tech was a thing in mainland China. So that's what we have. And over the past few years, we'll be maintaining over 300% year-over-year revenue growth. So right now we're past the point of we're already making money, and then we have lots of investors backing us up over the past few years. We have I think our early investors, including Horizon Ventures, which is the Mr. Li Ka-shing's money, and then we have the investment from Alibaba a little while ago. We have investment from Mr. Anthony Lam, the former financial secretary of Hong Kong SAR, the government. And we also have investors like from the Phones family and from the Science Park as a part of the government, wholly owned subsidiary of Hong Kong government is also part of our shareholders. And also we have some of the shares are also held by Hong Kong University as well, which is part of the deal where we spin off our technology.
Thank you. I think I saw Ron next.
Yeah, hey, thanks, guys. Thanks for all this. Just got 2 questions. One is about other countries and other languages. I mean, obviously, your focus on Hong Kong seems to be having half the market share is great, but I wanted to see what your extension is to other markets and countries. The other thing is about the actual sectors you're involved in. I mean, your example was very much around sort of more of a consumer play, sort of a customer rep with a consumer. Are you doing anything more on the more institutional side of things? I mean, a lot of the fines are related to trading activities and other things that happen within more the capital markets world. And I'm just kind of curious if you're focused on that at all.
Yeah, Hong Kong is definitely our home market where we have a huge market share, lots of presence in Hong Kong. But we also have presence in places like Thailand, Singapore, and we also have presence in UAE and Saudi Arabia, and also a little bit in Indonesia and Malaysia. So because the technology focus we have are actually really more on mixed language processing and the language switching. Like when people, whenever I go to somewhere where people speak multiple languages and they can switch on the fly, that's where we shine. And these places are actually in Singapore, Malaysia, Indonesia, Thailand, and many parts of the Middle East. So but in those markets, we mostly rely on our partners to do it. So we're our very close partner with the likes of KPMG, Deloitte, UI, PwC. They help our resell, and then they provide advisory services for we sell technology and products. So that's actually how we scale outside of Hong Kong. And in terms of in terms of market presence, in the banking sector, well, our largest customers by far are in securities firms in the security side, private banking, wealth.
I am going to have to stop you there. That was the timer. I'm sorry, you didn't have very long to answer that question at all. But Christy and Miles, thank you very much for your presentation and for answering the questions.
Yeah, sure.
Sure. Thanks, Hannah. Thanks, everyone.
Thank you. All right, we're going to move on to our next presenting company now. Okay, Benedict, you have 4 minutes starting now.
Good morning. My name is Benedict Schupli. I'm co-founder and co-CEO of FQX. And FQX has built the first globally accessible B2B infrastructure for electronic promissory notes, and it's based on blockchain technology. Why did we opt for the promissory note as the basis for our infrastructure? The promissory note is arguably the most standardized financial instrument in the world next to money. And it's the same whether one uses it in UK, India, China, or Chile because of the standardized legal framework governing it. In essence, it's an unconditional promise to pay a defined sum at a future date to a future party. And with just a handful of data points, one can effectively issue and transfer credit with just a few clicks. The FQX e-note can also be used as a payment instrument to pay your suppliers or as a collateral instrument. However, its really true killer application is the free and global transferability across jurisdictions and borders. The e-note also has an ISIN number, which means it can be integrated into the portfolio of asset managers and other institutional investors, which has never been done before for the asset class of supply chain finance in such a direct way. So the benefits arising from this combination of tech and tradition and financial instruments are vast. We can enable lending investing with new counterparties. As an example, just last week, a transaction was conducted between two publicly listed companies in Switzerland that did corporate to corporate lending between each other, which is something that has not been done before in Switzerland. And this has been done using the e-note. So furthermore, also no loan agreement is required or no piece of paper or wet ink needed. And last, we use qualified electronic signatures, which means that fraud that has been associated in the past also with supply chain finance can be almost entirely eliminated in the process. So the use cases we focus on are short-term debt, where a borrower obtains investing from an investor, pays it back with a premium at maturity. With this, we can disrupt commercial papers. The other cases are supply chain finance, where we have three-party relationships between a buyer, supplier, and an investor. And with this, we can disrupt dynamic discounting as well as factoring. So the market opportunity, in our opinion, is vast. So as said, we can disrupt existing use cases such as factoring and commercial papers. And we're actually doing both of these things with the Swiss Tier 1 bank. We're working with them to disrupt or replace their factoring product and introduce a new commercial paper product based on our e-note infrastructure. And on the other hand, we can also enable transactions which currently do not take place, which is why our infrastructure can play a great role in reducing the global trade finance gap. Our companies onboarded currently are 32 that have a combined revenue between them of $31 billion US, the large part of this coming from the Swiss Tier 1 bank. And we've raised roughly 7 million this far in 3 investment rounds, mainly been driven by 6 investors, which is the Swiss Stock Exchange, and Earlybird VC, a globally leading venture capital firm from Germany, which has recently just bought a big startup to the New York Stock Exchange. Other investors are very notable angel investors from unicorn founders from Germany, as well as the former head of EMEA of BlackRock. And our team currently consists of more than 20 people. We have subsidiaries now in Lithuania, in the UK, in Germany soon, and also in Southeast Asia, in Hong Kong and Singapore. With us on the call also here, Ben Travis, because Southeast Asia for us is a very important place to be.
Okay, Benedict, that's your time. I'm going to have to stop you there, but we'll see if any judges have any questions, please. One from Edmund, please.
Benedict, thanks for the great presentation. Seems to be a very promising product. In your journey of expanding your customer base and geographical locations, what are the difficulties and obstacles have you encountered, or do you expect to encounter with these products?
Thank you very much. One challenge thus far has been the, let's say, legal validation. And that has been mainly related to the fact that although our instrument is based on the globally recognized promissory note, there were some elements of it relating to blockchain technology, which were newer for some traditional corporates, but we've been able to tackle that with obtaining approval from regulatory authorities such as BaFin in Switzerland, in Germany, and FINMA in Switzerland, as well as legal opinions from world-leading law firms. So we've really seen the questions revolving the legal framework becoming much less and much less. And also the global trend is helping us because many jurisdictions around the globe are also now introducing their own electronic promissory note framework, such as Singapore with the ETA and also soon the UK.
Thank you. I think I saw Priyanshi first, and then we'll come to James, if that's okay.
Thank you for your pitch. You mentioned you wanted to increase your presence in the, in Southeast Asian region. I was wondering what is the timeline on that, and are you also looking for additional rounds of funding?
So we've already now started being active in Hong Kong and Singapore. We will time it in a way that we want to enter these markets first, obtain regulatory approval there, and also known that they function as a beacon all over Asia Pacific. So we have a team set up there now, legal entities in Hong Kong and Singapore, and now working to establish partnerships and start doing POCs. And in terms of funding, we do believe we're going for a Series A next year, and it is definitely our goal to also reflect our focus on Asia Pacific as a whole in our investor base. And currently it's not reflected. So for the next round, I think an Asia Pacific based VC is crucial.
Thank you. And James then, please.
Yeah, thanks, Benedict. It's a cool idea. I like it. My question is there's been cool ideas in trade and supply chain finance using blockchain before, and many of them still struggle to get the kind of traction they really need. So what are the issues around interoperability, and what's your strategy for creating that network effect, which can be so elusive even for really great ideas?
Absolutely. Well, thank you for this. The great thing is about our infrastructure we've built, it's a middle layer and on both ends of the equation. So we can, on the one hand, integrate into existing banks or FinTechs. And so we don't want to become the dominating platform because we know the customer acquisition cost for this would be too high. So currently we just integrated into a leading money market FinTech from Switzerland. They've already conducted more than 50 billion in transaction volume. And as of last week, they now offer our instrument. So we can profit from their very huge client base with just this integration. The same is going to be the case for the banks we will integrate into, or we're already integrating into. And on the technology side, we are agnostic. Right now, our basis is built on Hyperledger. We're expanding it into Ethereum, but we will also offer other standards. And this is the great thing about our product, because it's more of a legal standard than it really is a technologically platform. Yeah.
Okay, there's only a couple seconds left on your clock, Benedict, so I don't think we have time for any more questions. But thank you very much for your presentation. Okay, Edward, you have 4 minutes starting now.
Okay, hi all. Firstly, let me define the problem domain our business Onboard addresses. Every B2B and a regulated B2C business has to do some sort of sign-up process for new clients, and nearly all of them do it badly. Historically, this has been paper-based and involved input screening and decisioning that was all manual. If you go to any tech conference, you will hear numerous mentions of onboarding, and yet onboarding isn't a specific sector that people recognize. I think some of that is because onboarding comprises part of the dark matter of the workplace, and some of it is because it isn't sexy like marketing. But onboarding is the biggest space you know of, have experienced, but don't think of as a sector, and I see it as the sister space to payments. Every industry vertical may have specific questions they need to ask, and each company can decide to ask questions or do checks they believe to be useful. However, at its core, the onboarding process is similar, and the list of checkable things is finite and practically quite small. The difference at a systems level is which applicants do you wish to filter out and what confidence level do you need in the data. The reality is most businesses do one of two things: throw people at the problem, which is why banks spend $270 billion a year on compliance, or ignore the problem, which is generally what sectors like estate agents and art galleries do. The Onboard mission is to transform the financial ecosystem by providing a gold standard onboarding process to all. This, in my view, is actually the best way to prevent money laundering, credit losses, and fraud, as the financial ecosystem is only as strong as its weakest link, and bad actors are always looking for vulnerabilities. Most people think of KYC, anti-fraud, and credit decisioning as entirely different domains. There are two obvious problems with such compartmentalization. One is a large amount of rekeying of data, and the other is you don't maintain a single source of truth in a client. We believe every business should truly know their client in a holistic sense, and digital tools can make this process painless for both sides. We want people to embrace knowledge of their clients and not see it as a painful requirement from the regulator. We went back to the drawing board and designed a system that could onboard both individuals and business and could do all of the checks you might want to do automatically. We are product people first and foremost. My background is I've spent years building models for investment banks. And I suppose the way we looked at the problem was less than 1% of businesses can implement an API solution, which is why we actually started with a, no-code solution, and we're developing out our API offering now. We can and do go live with a new client the next day. If I had to highlight one of the many technological aspects of our solution, it would be the robotic process automation, as the system will chase end clients and request documents based on a risk engine which can be customized. We are a SaaS offering, and that means we offer a low-cost, pay-per-use model with no upfront, no minimum commitment. We believe this is the right way to disrupt this sector, which has really been dominated by enterprise solutions for banks in particular. And an enterprise solution for a bank is a very lucrative thing to do, but it's limiting. I'm often asked, who do I believe is our biggest competitor? Our biggest competitor believing they can cobble together a solution themselves. Simple message for anyone who believes that: speccing the solution is much more difficult than you think. The development cost and time is longer than you think. The solution will be quickly deprecated, and you will not benefit from the system learning that we can leverage. We think of the different industry verticals in terms of how regulated they are and how they perceive the risk of doing business with a new client. But I should highlight that regulation is increasing to cover more verticals, and fraud is increasing as fraudsters become more technologically savvy. I think we're very lucky to be based in Europe, as GDPR and AMLD5 are probably the highest standards of regulation in privacy and KYC respectively.
Okay, thank you, Edward. That was your 4 minutes. Let's see if any judges have any questions. I see one from Jacob. Yes, please.
Hi, Edward. Thank you for the presentation. I'm just wondering, do you have any traction from any institutions right now as a client? Thank you.
Yeah, well, we started out deliberately to prove something that I think not everybody thought was possible, that we could build something that worked across different verticals. So yes, we do. So we have clients who are crypto, we have two venture capital funds, we have lenders, we have a number of lawyers. So what we wanted to do was not just prove that our system worked, but prove that our system worked in multiple verticals. And we've very much tried to, instead of just focusing on a vertical and trying to hammer that, we've tried, okay, look, can we demonstrate at our level that this works across across different sectors? And that's what we've done. Yeah, and as I think I've mentioned, our clients, any client who uses our system, they will give you the feedback. It's super intuitive and simple to use. So the design of the system has been driven by usability for people in different verticals.
Great, thank you, Edward. I think I see a question from James next, please.
Thanks. Edward, in your presentation, you say you want to be the Stripe of KYC. So Stripe is Stripe because they solved a lot of payment core in and out, money in and out issues. And then on top of that, they would ask the customers what next, and then they began to figure out new solutions they could build to become more viable. So what are the conversations? Are you at the stage where you're able to think bigger than just being the core KYC?
Yes, we are. Yeah, great question. Love the question. Yeah, I'm Irish too, so I love the Collison brothers. So, you know, their philosophy is a brilliant philosophy, and it's our philosophy. So we have a live product. Clients are using it. We're already developing modules that are driven by client feedback. For example, I'll give you one example of a module we're working on right now. One of the biggest problems with KYC is there's a policy. Somebody writes that policy. They're probably a lawyer. They write a whole load of words. That policy never gets implemented on the ground, right? So there's the ability to go, how do I actually empower somebody to use some visual interface to create a policy, and then the system will implement that. So there's higher level modules where we've been listening to clients and go, well, what's the big problem? The problem is what I want people to do isn't actually what happens. So yes, we talk to our clients constantly. We have live support in the system. We don't just talk to high level people in the organization. We talk to the users and we go, what should we be building next? And that is exactly what we're doing.
Great. Were there any other questions? Did I see any hands go up? Edmund, yes, please.
Yeah, would love to continue the questions, and when you're paving your way to a super app, so what are the unique features at this point in time, and maybe give some colors on the future pipeline? Thank you.
Yeah, look, there's a lot to it. It's a bit like the Stripe analogy. There's a lot to this. So you could talk about the kind of deeper tech aspects, which is really around uniquing a person and uniquing a business globally, which is not an easy thing to do. But there's also less deep tech solutions, like we've just developed as Zapier output. So that's huge value add to a lot of clients, because what that does is we get the data right in the first place. And I believe we can be the foundation of the data architecture of business. And then a Zapier output basically passes it into whatever system you want to put it into. So we've kind of got multiple threads of things we have to do. One is on the user side. How do we make people's lives easier? How do we reduce menial tasks? How do we reduce those kind of repetitive tasks that they shouldn't be doing by chasing clients? Like another example, we chase clients via text, right? So text increases onboarding speed by 50%.
We are going to have to wrap up there. Thank you very much. Thank you for your presentation. Judges, thank you for your questions. Let's bring in our next company.
Okay, Kat for session.
Hi, Johan, you have 4 minutes and your time starts now.
Thank you, Hannah. Good afternoon. My name is Johan Egnell. I work for Mitigram. At Mitigram, we make trade and trade finance seamless. Trade today is massive. Life as we know it depends on trade. The life we live depends on trade. And all of this is supported and underpinned by trade finance. In total, close to $10 trillion is supported of transaction is supported by trade finance. But trade finance is not efficient. It's fragmented, and corporates, they run trade finance on Excel, in WhatsApp, in Outlook, and they use phone calls. So all the processes are manual, they're error prone, and they lack digitization. This is a well-known fact that trade finance is way behind in digitization. We take all of this, siloed, all this complexity, and we make it easy to work with. We make it seamless. We do so through three products that are in production. The first is where we came from, the Mitigram, which is the marketplace. It's the world's largest marketplace for trade finance. Corporates all over the world use it to reach out to any bank in the world for requesting pricing and availability of trade finance. Manager is our second module. It's for corporates as well. It allows corporates to move away from Excel and to use a proper interface to manage their trade finance transactions and to communicate with all their banks. Gateway is for banks. It allows them to digitize all the incoming requests for trade finance, which is today is via email and WhatsApp or phone call. We allow for this by using technology. First of all, we have an AI engine that allows our users to read any type of incoming format. So the system is constantly getting better of interpreting the incoming information. And so that helps them to move away from manual inputting. We have an API-based connectivity that allows our systems to speak to other systems in the industry. Most recently, we are connected to the SWIFT network. We also have the most or the best version of the Microsoft Power BI that allows us to really help our users to see what's important in terms of data. So we rely on technology, but we deliver solutions. We have raised 19 million across Nordic investors. We are a Swedish company. We have some blue chip investors. From our beginning, we have seen growth. This is the marketplace values that have been facilitated on our platform. We have now done more than 70 billion worth of transactions on our platform. And we do more than 2.5 billion per month at this stage. Our clients are large corporate clients and their banks. We started in the North with Ericsson, Scania, Volvo, moved into Europe, some very large corporates there, Mertec Nimont, ArcelorMittal, and now into Asia with some big traders, especially, and mining companies. And when you onboard these large corporates, the banks follow. We have, except for SWIFT, I don't think there's any network in trade that's larger than ours. We capitalize our products using different business models. It's a SaaS model for corporates. They pay depending on how many entities they have. But we also have a volume-based for banks. They pay how much they are awarded business. And also on the third module that we have, which is a white labeling solution, allowing banks to digitize all incoming requests. That's also a SaaS, depending on the number of users that the banks have. We have an experienced team and quite diverse. Our CEO is from Italy.
All right.
Thank you very much, Hannah. I lost track of time. I'm showing this slide as well.
No worries at all. Let's see if any of our judges have any questions for you. Yes, Philea, please.
Hi, my question is, you mentioned your target corporates are the big companies, but I thought most of the big companies will have their go-to banks, will have their relationship banks. So why do they still need to come to a platform like this rather than just go straight to the banks that they are used to or have a good relationship with and get the best rates? And also, am I right to understand that this is more like a platform for sourcing, for linking up the corporates and the banks rather than facilitating the the financing itself? So do you process the financing or is it simply a matching? Thank you.
I'll start with the second question, and the answer to that is you're correct. We are facilitating the communication more than anything else and putting them in touch with each other. For the first question, the large banks, yes, they have the relationship banks, but they have quite many. And if they have 15 banks, they don't have to use 15 emails for each LC or for each receivable or each promissory note, which they might have 5 per day. So it saves them a lot of time. But that's the first module, which is the marketplace. The second module is just, regardless if they have 1 or 10 or 15 banks, they still have to manage these transactions in Excel. And that's where we help them to do it as well, efficiently.
Can I ask a follow-up question?
Sure.
So for these big corporates, I thought they usually have very good payment terms. So it's usually the supply chain that suffer and need to get more financing, whereas the corporates usually they have the upper hand. So why do they still need trade finance?
Well, they need trade finance for a lot of different transactions that they do. If they sell into more sort of tricky markets, they need to have they receive LCs that they want to confirm and discount, and same on certain receivables. So they still need trade finance. They still rely on trade finance, especially the commodity players.
Thank you. A question from Ron, please.
Yeah, hi, Johan. Thanks for the presentation. I just had a question, a bit more on the Digi Gateway, or the Miti Gateway, sorry, solution. I just want to be clear. So are you requiring people to use a standardized form? So sort of, is it something they have to come in your system and fill out a form in a certain way? Or are you taking all different types of structure depending on what these letters of credit, let's just say, are coming in different formats? And then the other question is, what do you do when you get it? I mean, when you digitize this, are you also doing risk checks? So are you doing checks that would be done by humans in the sense of making sure about accuracies or looking for fraud? Or are you doing other checks in regards to compliance and risk that maybe checking in with third-party API calls, et cetera. So I just want to understand the processing as well once you get these letters of credit inside.
Thanks. First of all, it could be a standardized form if the banks want to. Then we provide them with a white labeled form page. But it's also the most, what they do, the banks, is that they grab this incoming request via email, they drag and drop it into Mitigram, where the system, through this AI engine, reads the content of the email and understands the request from the client. So that's how the bank gets this, the data into the system. From there, then, we certainly the next steps for us is to integrate with the bank's compliance checks and whatever checks that they want. For now, it is a workflow tool for them to serve their clients.
Laura, yes, please.
For such large number of transactions accumulated in the past few years, could you help briefly describe your P&L position for revenue and EBITDA?
Yeah, in detail, that would have to be an NDA, but we do run on the investor money still, but we have a sizable revenue still, but we are expanding. But we do have a good revenue, topping more than $1 million.
Okay, were there any further questions for Johan? Jacob, yes, please.
Hi, Johan. Just you have a large number of customers and corporates and banks, right, on your client list. How big is your sales team, right? How long is your typical sales cycle?
Sales cycle is between 3 and 18 months, I would say, so quite long, definitely longer than we would like. We have a sales team in 3 people in Asia, spread out over Singapore, Korea, and then we have maybe 6 in Europe, spread out all over Europe.
Thank you very much, Johan, for your presentation. Judges, thank you for your questions.
Thank you, Hannah. Thank you, judges.
Okay, Alexis, you have 4 minutes starting now.
Good morning, I'm Alex. I'm a co-founder and CEO of OpenCBS. A few years ago, I had the chance to start a microfinance institution in Central Asia where about 70% of people are unbanked. Our mission was to serve the less privileged by giving them access to basic financial services. And we were looking for a system, what we call a core banking system. But what we could find was too expensive, too complex, and too restrictive. So this is how came the idea to start OpenCBS for Open Core Banking System, to develop systems that would be agile enough to serve the customers in the way they want. Our cloud-based core banking system is built around the needs of people and takes the complexity out of banking. For instance, with OpenCBS, you could start a new product, a new financial products in just minutes. Or you could also apply new KYC fields to comply with the regulations, for instance, set by the central bank or the banking regulator. And also you get a 360-degree view of your client, everything like customer information, products, balances, everything in one single place. So for the top management, it's very interesting because thanks to OpenCBS, financial institutions can bring down their costs, managers can get real-time business intelligence, customer-facing staff can sell more easily, and ultimately clients are happier. For the IT department, it's also very interesting because thanks to our infrastructure-like solutions, they can go live within weeks, and also because we have open APIs, we can interface with third-party systems very easily. But once we had developed a system for microfinance, which is a very actually volume-intensive industry, often operating in difficult environments, we realized that with reasonable adaptations, we could also propose our system to the fintech industry, for instance, digital lenders, for instance, mobile wallet companies, and even to the lower end of the banking market, for instance, smaller banks in developing countries. It really opens up new opportunities for us, because if you look at the market for banking infrastructure, it's 40 billion in total today, but it's growing very fast. And if you look at microfinance, it's growing reasonably fast. If you look at fintech, it's growing 50% a year. And if you look at banking, it's growing more moderately, but of course the market is huge. And more importantly, the market is now switching to SaaS. So it's a great chance for us to grow in this market. Even more interestingly, some competitors like Mambu, who are in the SaaS market as well, have been so successful in raising so much money that they are neglecting that lower end of the market where we are going now. As of today, we have really proven our business model. We have 15 live clients. We have impacted the lives of 400,000 entrepreneurs, and we have generated $800,000 of revenues. We make money by charging an initial reasonable fee for customization and then a yearly SaaS fee based on the volume and the size of the financial institutions using our products. As for our team, we are mixing experience from banking, IT, and microfinance. So together, we are really good at translating basically the needs of the clients into working products. And we also have a few advisors who bring specific experience in, I would say, topics that are relevant to OpenCBS. So thank you very much. We are very delighted to participate in the Hong Kong FinTech Week Fast Track, and just come and talk to us during the conference if you have any interest in OpenCBS.
Wow, thanks very much, Alex. All right, let's see if any of our judges have questions, please. Yes, Sethapong, please.
Just a quick question on your main target customers. Is it the current bank that's trying to switch or trying to find a replacement of the core banking, or is it more towards the new financial institution who's looking for a more agile core banking system?
So mostly the second part, I mean, mostly microfinance institutions, smaller size institutions, and more like agile new type of institutions. We are not big enough and credible enough to target the larger banks right now. What could happen is that a bank, for instance, an existing bank wants to launch a digital lender or a virtual bank, then we could be relevant. But we are not targeting the larger bank now. We are mostly targeting sometimes the smaller banks in developing countries, which now run on local solutions or not on like this kind of big legacy system. And those sometimes they come to us because we are agile and also inexpensive.
Thank you. All right, let's go to James and then to Mark, please.
Yeah. Thanks, Alexis. You noted that there's Temenos and Thought Machine and Mambu and all these other players in your space. What kind of moat can you build so that they decide not to come after your clients? Because technology makes it so easy to them to scale, down to micro if they wanted to.
Yeah, it's definitely a challenge. At the same time, it's a bit, even if the technology is available, we also need some staff. So I would say what is relevant in that market is that first, we have an office in Kyrgyzstan in Central Asia. So we are also accompanying the client all through project delivery, which is very important, especially for the new types of institutions, the smaller ones, because they don't have a full IT team to work on the project. So we are, I would say, giving dedicated accompaniment to the client at an affordable cost. That's important. Also, we already provide, and not our competitors do so, cloud agnosticity. Basically, we are able to deploy our solutions with various cloud providers with the same level of, I would say, service level agreement, availability, and basically efficiency. And that's also very important because depending on the market, sometimes you are not allowed to host the data in the cloud with Amazon Web Services or the traditional, I would say, cloud banking providers. So we have also this flexibility and agility that sometimes other competitors don't have. Last thing, we made the system to be very simple, and most of the other systems they kind of downscale a kind of complex system to, I would say, something more simple. On the contrary, from our side, we have been building the system from scratch to be very simple for those institutions that are not those large-scale banks. So we are more able, I would say, to provide a UI and a product which is easier to use for those clients.
Great, let's go to Mark, please.
So James, that was a good question. That was kind of what I was looking for as well. But since I have you, could you tell us a little bit more about the clients that you have? You said, I think there was 15, and sort of where they are geographically and the type and size.
Yeah, so the clients, you can see they are spread a little bit all over the world because we basically don't refuse clients, but our main target areas are Africa, Southeast Asia, and the Middle East, mostly those areas where you have a lot of financially underserved people, and therefore also a lot of new institutions serving those underserved people. So our key markets are really Africa, Southeast Asia, the Middle East. As for types of institution, as of today, most of those clients, 9 out of them are microfinance institutions. We have also a few fintech lenders, like a digital lender, for instance, in Thailand. And we also have a few banks, mostly in Central Asia, in Kyrgyzstan, Uzbekistan. They have 20 banks for a very small country, so that's where we have those banks also using our clients. Finally, we have a few funds which are also using OpenCBS to manage their lending. They are doing wholesale lending to basically social businesses or financial institutions, so we have a few funds also using OpenCBS. To give you one name, for instance, you could Google FINCA, F-I-N-C-A network, which is a large network of microfinance institutions.
Great, okay. Very few seconds left on the clock, but Edmund, I did see your hand go up, so you're welcome to ask your question.
Yeah, I see. Besides lending products, what products do you support as a core banking systems?
Okay, customer profiles, savings product, current account, all lending products and credit lines, things like that. Okay, done.
Perfect. Thank you very much. All right. That is your time. Let's bring in our
Bye,
next
everyone.
Okay, Moritz, your 4 minutes starts now.
Thank you. Hey there, I'm Moritz Müller, Head of Product at Squirro, and it's an absolute pleasure to be here today to pitch to you Squirro. Let's jump right in. If you call up one of our customers, such as Standard Chartered Bank or Bank of England, they will tell you that we generate for them up to 11% more opportunities and help them to reduce their resolution time for service and risk tickets by 32%. How do we do this? In a world of data, it's actually insights that matter. Insights that are generated by analyzing all the data that is hidden away in all the data silos we have nowadays in an organization. If you look at all the companies in the financial services sector, for instance, they have all those data silos in their organizations. And these data silos, they have a lot of unstructured data, like for instance, the research report that you see here at the center of the screen. Now, if you look at asset management, an asset management company wants to understand how their competitors and the market is seeing the future development of the market to understand how they allocate their funds. Now, when we put this through our insights engine, we generate insights like you see on the right side. For instance, like BNP Paribas moves corporate bonds to overweight. This is exactly the insights that helps to achieve a top-line impact to generate revenue by better fund allocation, or to reduce at the bottom line the cost respectively. Now, in terms of digital transformation, our vision is that going forward, any organization will have an insights layer, where an insights engine connects to all the data and all the systems in an organization and makes this data computable in one way or the other. On the other hand, there's the human perspective. The human is still important for the picture because the human makes the best decisions in all the fluid situations. Hence, we call the whole approach augmented intelligence. Now in our product, we tackle this by solving this in 3 steps. First, we connect to the different data sources. We gather the data. Then we use our insights engine to make the data computable. And at the end, we act on the data by bringing out recommendations on the screen, on the dashboard to solve very specific use cases. Let's look at 3 of those use cases. I've spoken before about asset management. Countryam, for instance, one of our clients, uses our insights engine solution to help find better opportunities to allocate assets, and it has actually a remarkable impact on their business revenue. Let's look at service insights. We help our customer Standard Chartered to not only automate and reduce their time for service tickets resolution, we also help them to understand external data and internal data to source opportunities that they can eventually pitch to the corporate banking client. On the risk side, we work with our customers such as Bank of England, Deutsche Bank, Bundesbank, or European Central Bank to bring the regulatory insight solution to the next level. Now, who's behind this? We are a global team, a team that is led by founders that are serial entrepreneurs. We are backed by venture capital, for instance, from Salesforce Ventures or the Build Group, a US company. And our approach and our solution has already seen quite some recognition. For instance, if you look at the Asian market, we have won the Artificial Intelligence Award for the solution that we have built for Standard Chartered. And we have won a AAA Asset Asian Award for that solution. At the same time, we've been recognized by Gartner in their Gartner Magic Quadrant for Insights Engine as the most visionary company. Now, over the past years, we have seen year-on-year tremendous growth up to 100%. And we believe that where we stand at the moment, we can enable, and we do this to our clients, to build an end-to-end AI platform. We help them build first applications. Tomorrow, we enable them to build their own AI applications. And in the future, we will be the all-pervasive insights engine for all the business needs. We will be the first end-to-end augmented intelligence solution. And we want to bring all of this to the Asian market. Next step is Hong Kong, and that's why we're here, and I'm looking forward to your questions. Thank you.
Wonderful. Thanks very much, Moritz. Let's see if any judges have any questions, please. Yes, please, James.
Thanks, Moritz. I mean, Squirro's been around. You showcased some of your clients. What's the revenue picture like? I mean, you guys are kind of established now. So how are you making money and what's that look like?
Yeah, it's a good question. This year we are, in terms of subscription, roughly at 4.5 million ARR. By the end of the year, probably at 5 million. That is 100% year-over-year growth from the last years. We have seen a bit of a COVID impact, but I'm very surprised at the moment already. There is a huge catch-up that is happening in terms of digital transformation, because all companies out there are looking to solve their problems, especially with everyone working from home. It's more and more important to source the right information at the right time. So it's looking pretty good at the moment.
Can I ask a quick follow-up?
Yeah. Go ahead.
So, I mean, there's a lot of companies that we all hear from doing this sort of thing. Maybe there weren't so many in 2018, but now there's more. So that revenue picture, is that predictable?
Yes. I mean, what you see are actual numbers. So 2022, next year is what we foresee at the moment from all the inbound leads that we have. So we strongly assume it's predictable. And you also see that recently Build Group has, I think, I'm not sure if it's officially announced yet, already invested in us again. So we definitely see a solid trend.
Yes, please. A question from Ron.
Hi, Moritz. Thanks for the presentation. Just a quick question about competition and your competitive advantages.
Yeah, it's a good one. If you look at the Insights Engine Magic Quadrant, there's a lot of competition out there, but I think there are not too many competitors that do exactly what we do. And there's a reason that Gartner pictured us as the most visionary company. I mean, we're probably the smallest of all the company in there, but the most visionary one, because we really focus on bringing AI with slow and fast learning, machine learning components to the business. So we see that there is a huge market share out there for us to build really targeted solutions.
Okay, great. Were there any further questions? No, if not, then we can move on. Thank you very much, Moritz, for your presentation, and let's bring in our final company.
Thank you.
Okay, Tim, you have 4 minutes and your time starts now.
Hi there, thanks. So my name is Tim and I'm the CEO and co-founder of Take. At Take, we provide wealth for everyone. If you don't make money, we don't charge. Well, what does that mean? Well, Take is a wealth management platform that automatically builds and executes personalized wealth management plans for free. We are for everyone because the minimum investment is only 500 Hong Kong dollars, and we then charge our fees only when we successfully increase the wealth of our customers. So where are we in the journey? Well, we've raised over $1 million to date, and we plan to launch by December. So we were accepted into the Cyberport incubation program in February last year. We raised our first round in June last year and did a JV with WorldChamp. We've launched a waitlist, we submitted our license applications, and we closed our second round in August last year. On that waitlist, so we've experienced incredible waitlist traction with ridiculously low ad spend. So we've got over 3,000 people on that waitlist and growing. And the most amazing thing about that is that 30% of all of those leads are from friends and families of those referrals of people on that list. Very attractive conversion rates and cost per waitlist, and helped by very favorable media traction. So why are we doing all of this? Well, the retail investment space is a massive untapped opportunity. 50% of people in Asia save regularly, but just with money building up in their bank accounts. And if you look at all of that idle cash sat around middle-class bank accounts around Asia, that adds up to $5 trillion crying out for a solution. And why is that? Well, because the traditional supply chain remains entirely manual. So we've got the existing universal funds on the left-hand side. Then the first step of creating those investment products remains a manual product factory step. They're creating prefabricated products. We all know about the very manual sales process and then that face-to-face customer experience. So what happened next? Well, robo-advisors came on the scene and they automated but just the distribution step of that process. So they did nothing to that prefabricated manual product factory and that one-size-fits-all solution. So what does this mean? Well, all the existing robo-advisors look the same. So we've all seen these charts where you've got that chart that goes from the bottom left and fans up to the top right. Unfortunately, because it is just a buy and hold fund that is prefabricated and meets the same for everyone, there's nothing that meets your unique needs. And so that's where Take comes in. In Take, we have automated everything, not just that distribution, but we have stripped out that manual product factory, which means there is nothing prefabricated with Take. So the journey starts with the customer, and actually we then automatically build live exactly for their needs and requirements. So with Take, You can build up and access your wealth exactly as you need it. We have unrestricted planning pools with an infinite combination of personalizations. On any of those unique plans, we can then provide live advice. We use something called Monte Carlo-based stochastic modeling, where we run through over 1 million unique simulations, and we do that in less than a second. And then all of the ongoing fully automated trade execution and dynamic allocation. This is only made possible by a proprietary and end-to-end technology, which is patent pending. So all of the underlying wealth management algorithms, the trading system, the transaction accounting system to reconcile everything down to each individual and unique customer account, and all of the regulatory reporting, proprietary and patent pending. And so this means that actually it's this technology that has facilitated us to create the world's first investment platform with performance-only fees. So we charge our fees only when we successfully create wealth for our customers. We don't charge commissions. And when we do charge an advisory fee, it is a fraction of the industry standard, which is often 3 or 4% here in Asia. And this is the most amazing thing about this. Because we have automated literally everything end to end, our estimated monthly operating cost per customer is just $1. That is in sharp contrast to the traditional supply chains with teams of hundreds of people. Our strategy of distribution is direct to customer and very favorable statistics around cost per click, conversion, and referrals. We have a team of senior industry veterans, so myself, the CEO and co-founder, 14 years experience across Asia, the UK, and the US. My co-founder Lee, the CTO, and then Ronald Cheng, who came on board as a co-founder for compliance. Following the close of our second seed round, we plan to launch by the end of this year and raise our Series A in early next year. We believe we've got something significantly better than the market. We have global ambitions, and then within 10 years, we believe that we'll be a 4 million business with very attractive revenue and profit. So that is Take, and we're rightfully yours. Thank you very much.
So sorry, I did the old unmute thing. James, a question from you, please.
Tim, good luck with the launch, and congratulations on getting the company off the rails. What about advice? Without the data, you can't really provide the personalization that you'll need, and I think there's a lot of models out there that are trying to move much more to an advisory type model. Is there a scope in what you're doing for that, and how do you get this off the ground when you don't have a lot of customer data to begin with? Thanks.
Yeah, thank you. So we provide advice, and it is all on a fully unique basis. So what we do is that is what the stochastic modeling comes in. And what customers can do is that they can create any plan that they want. So rather than just buying and holding, this, for example, if you had cash flow that was going in for the beginning and then cash flow coming out, we model exactly that. So that's what we mean by a unique personalized plan. It's actually your cash flows coming in and coming out. We then have a proprietary data library for all of that underlying fund data and performance. And that's when we say we actually are able to provide live advice on the click of a button. So we provide trade execution and personalized advice in less than a second.
Yes, please, Laura.
Thanks for the introduction. As you are now providing investment advice to non-professional investors, what's your plan for regulatory compliance?
Yeah, so we are going through a license application process now to be fully compliant, and we will be fully regulated by the SFC. So we'll be getting a Type 1 license for trade execution and a Type 4 license for regulatory advice.
Great. Did I see a question from Jacob?
Yes, sorry. Tim, can you just share a little bit about your near-term targets, right, in terms of financial and operating metrics for the company?
Yeah, sure. So we are pre-launch. We're looking to launch by the end of this year. We're then looking to target to launch in Hong Kong first. So in our first year, it'll be to scale up within Hong Kong, and we're targeting to have 10,000 customers by the end of our first year. Thereafter, we'll then be looking to actually expand across Greater China and Southeast Asia. So my background is in insurance, and actually the incumbents in the mass market savings and investment space is actually life insurance companies. And so actually the opportunity exists where any market where life insurance companies dominate that mass market savings space, which is Greater China and Southeast Asia.
Thank you.
Great. Were there any other questions? Yes, Sathapong, please.
What's your international expansion plan? Is it going to be a partnership model, or what kind of model is it that you are looking for?
Yeah, so we are a direct-to-consumer company, and we'll be looking to be locally licensed in each market that we go down. The licensing that we are getting is an intermediary stockbroking and advisory license, so the easiest and least capital intensive. We'll then be looking opportunistically around partnerships for each market that we enter into, but it's primarily a direct-to-consumer business model for now.
Okay, great. Any further questions? In which case, we can say thank you very much, Tim, and judges as well. Thank you very much. So, wow. Well, we have seen some incredible pitches today from some absolutely fantastic companies. I want to say a huge thank you to all of our pitching companies for your time and energy, and to our judges for your fantastic questions and your expertise on this session. I'd just like to let everyone know that you can find out who has won today's pitching session live at Hong Kong FinTech Week. We'll be announcing it live on the Hong Kong stage at 11:30 on day 1, the 3rd of November, and again on the main stage just after lunch at 1:30. Day 1, 3rd of November. We look forward to seeing you at Hong Kong FinTech Week in person, and that's all from us for now. Thank you very much and goodbye.